Hello and welcome back to another episode of the For the Property Investor podcast. And we're here with the weekly news, of course, and the only man that brings us the news is Nick Bendel. Hello, Nick.
Hello, Owen. Great to join you.
And thank you again for bringing us the news. But before we get into the news, anything interesting happen in your past week?
Well, I had something interesting. I own a content writing business called Hunter and Scribe. We write content for finance and property businesses throughout the country. And an interesting new client. A lot of the clients I work with are mortgage brokers and buyers agents, accountants. I really enjoyed them, but they've generally got very similar business models. But this particular client is a private lender with a business model that's completely new to Australia. I don't want to reveal what the model is, because that will then kind of give away the client, and I don't know if they want me to disclose their identity, but we wrote some website content for them over the past week, and it was just really stimulating to deal with the client with a very interesting business model.
Wow, that sounds exciting. I look forward to hearing more about it.
Yes, you are privileged. I will tell you all about it once the cameras stop rolling.
Ooh, okay. Very exciting. I feel privileged.
And anything interesting happened with you and Leifield?
Well, it's since we spoke last Monday. I have to wish everyone a happy new year because it's new financial year as of last Tuesday. So yes, it's having a father as an accountant. It's something I grew up with. 1st of July was always Happy New Year. But I'm still getting counselling for that part of my childhood of growing up like that. So we'll put that aside. But it's something that is a busy time for us as a business. Closing off the trust accounts for the end of financial year as well as end of month, which, as everyone knows, it's something that I always mention once a month as it happens, because it's always a busy time for us. So yes, that's kept it busy, but it was a fairly good week other than that.
Okay, well, the good news is you won't have to deal with end of month for, I don't know, another few weeks.
At least a few weeks, yeah. So I won't talk about it again until then.
Okay, well, I look forward to it. Shall we get into the news?
Yes, Nick. What's in the news this week?
Our first story today, buyer activity heating up. REA Group senior economist Anna Flaherty said search activity on realestate.com.au had significantly increased due to the February and May rate cuts, and that buyer activity might spike even more if the RBA cuts rates again during its July meeting, which at the time of recording is actually happening tomorrow. 2 interest rate cuts is one thing, but when you have 3 in a 6-month period, that's really going to help to boost confidence, Anne Flaherty said. Every cut helps to improve borrowing capacities, and that will flow through into how much people can afford to pay for a property. At the same time, surveys show most consumers expect prices to rise over the next 12 months, which could become a self-fulfilling prophecy. When people strongly anticipate that home values are going to be higher, it might drive them to purchase sooner than later, Anne Flaherty said. So, Owen, how would you describe the balance of power right now between buyers and sellers?
It's fairly even. We deal with a lot of buyers agents and sales agents, and in general across the board it's fairly even. But when we deep dive into specific markets, yes, it's all over the place. Depends on what type of property you're looking at. Depends on the area and what's happening in that marketplace right now.
We've had 2 rate cuts already this year, and that, of course, has increased the borrowing capacity of the average buyer. If the RBA cuts rates again tomorrow, that's going to lead to an even greater increase in the borrowing capacity of the average buyer. What would that do to demand?
It'll definitely fuel it. And if anyone's hoping that yes, their borrowing capacity will increase so that they can buy that property that they've been wanting for. Get in quick because you might get priced out again fairly quickly.
Okay, so you're talking about buyer demand increasing and prices rising. Let me push back against that, Owen. The nation's median property price has increased 44.3% over the past 5 years, according to Cotality. So doesn't that mean we've now reached an affordability limit and that it's impossible for prices to rise any higher?
You would think so, and to a point, yes, but there's still quite a bit of pent-up demand. And yes, as prices continue to increase, that demand will start to peter off. But there's still pent-up demand out there in the marketplace who can afford to, especially as interest rates drop, that can afford to borrow and borrow more as they drop. And we still expect to see prices to continue to increase as a result until we get more supply that will help ease that demand. Then we're going to continue to see prices increase.
Okay, so you've talked about affordability, supply and demand, which leads on really nicely to our second story today. Residents campaign for more development. The ABC's Compass program has published a story on Sydney Yimby, or Yes in My Backyard, a group that is aiming to transform the expensive Sydney property market. Sydney Yimby is campaigning for more property development and more urban density in order to increase the supply of housing and thereby put downward pressure on prices and rents. One of the case studies cited by Compass was an initial state government plan to build 100 apartments on government-owned land near the Royal Prince Alfred Hospital in Camperdown. But thanks to campaigning by Sydney Yimby, the government ultimately decided to build 500 units with at least 200 reserved for essential workers. Owen, what do you think of the Yimby movement in general? Not just this specific group, Sydney Yimby, but just the Yimby movement in general?
Well, it's a breath of fresh air. It's definitely a bit of a change from the typical NIMBYs that we have to deal with, and who don't want any change, any development, any progress. So, yes, it's good to see. I don't know if there's any particular agenda behind it, apart from just smart, intelligent people who understand that progress needs to keep moving forward. It's a good thing.
There's a line that I've quoted in previous podcasts. I remember reading in The Economist years ago, a line that always just stuck in my head about property owners being the world's biggest cartel. When people buy properties, they band together to stop or limit more development, acting kind of like a cartel. So I understand why you would support Yimby movements, and I know you want there to be more property development and for the supply of housing to increase. But let me again push back against that. Compass, as well as kind of explaining the Yimby movement, they also reported some of the counter arguments against more urban density. One of the counter arguments being that it erodes the local character of neighbourhoods. Is that a valid concern?
I guess so, but so does the sight of people sleeping in local parks or on the street in bus shelters because they have nowhere to live and they can't afford anywhere to live. So if we don't want homelessness in our backyard, then we need to have progress in our backyard. So that's the crux of it.
Okay, well, let me throw another counter argument at you. If we're going to increase the amount of urban density, that means we're going to have more of these big apartment blocks. But these big apartment blocks have a reputation for poor workmanship. Is that a valid concern?
It's a concern, but it's a totally different topic that needs to be dealt with, and which is being dealt with. And it's that again, that bringing that up doesn't solve the homelessness issue and the affordability issue.
So what I think you were kind of hinting at, I don't want to put words in your mouth, so please correct me if I'm wrong. I think maybe you were suggesting that no matter how many properties we're building and no matter whether they're houses or units, we always need to pay attention to the quality of the workmanship. And therefore, it's not really an issue whether we're increasing or decreasing the amount of supply. We should be paying attention to the quality regardless.
Well, yes, and sorry for not clarifying, Nick. I thought that would be a given, and it's common sense would say that we always need to ensure that there is good quality. Otherwise, we end up in the situation that we have had in recent years, where whole apartment buildings have been condemned. Because of poor workmanship, and it's so we're not actually solving anything in that process in relation to supply and homelessness.
Our final story today is a little bit different. Consumer spending and confidence remain flat. Household spending rose 4.2% year on year in May, according to the Australian Bureau of Statistics. That compares to an average annual growth rate of 6.5% since 2020. In response to the household spending data, Westpac economist Neha Sharma said, retail spending has now fallen short of market expectations every month since February, highlighting just how entrenched cautious spending behaviour is among households. The RBA has delivered 2 rate cuts so far this year, with a third widely expected next Tuesday, i.e. July 8. The lower rate profile and still healthy labour market should support a gradual recovery in consumption over the second half of 2025 and into 2026, but there are risks. Notably, consumer sentiment around family finances has trended lower through the first half of the year, suggesting a cautious spending mindset may persist for even longer. Owen, interest rates have been falling in 2025, so why have consumers been reluctant to spend?
Well, I think it's too early to tell, Nick. It's these things take a while to filter through into the economy. Remember, interest rates aren't just affecting homeowners; they're affecting businesses and they're affecting many other aspects. And those things need to flow through. It can take a couple of months for the effects of those interest rate drops to start taking effect, and for people to start feeling it in their hip pockets. So I'd stay tuned. I think over the next month or two, especially with if we get the expected rate drop this week, that we might see an uptick in confidence.
The latest Roy Morgan Consumer Confidence Index from the end of June had a rating of 87.2 compared to a long-term average of 105.2. For those who don't know, anything above 100 indicates positive confidence, anything below indicates negative confidence. Should we be concerned, Owen, that consumers are low in confidence and reluctant to spend?
No, I think it was very much needed to be able to bring inflation down. And we've only just seen that really kicking in properly with the most recent inflation figures that have come out. And I think the RBA would be feeling a lot more confident about the economy and inflation, CPI figures. So if we definitely want to have that soft landing though, but we also don't want to overheat the economy at the same time. So I would expect if we do see this rate drop this week, that it would likely be the last one for a while.
Okay. Well, Neha Sharma says the RBA is likely to make a rate cut, which again is tomorrow at the time of recording. What's your prediction?
I would think I would agree that we would expect to see a rate drop tomorrow, and It's and as I just mentioned, I think that would probably be the last one for a while. If everything starts to level out and go as expected, but in the crazy world that we live in at the moment, who knows? Anything could happen in 3 months' time.
Yes, I also think there will be a rate cut tomorrow, but regardless of whether there is or there isn't, I think every meeting this year is going to be a live meeting in which there's always a possibility of another rate cut.
Yep, you never know.
Well, thank you as always for the great chat, Owen. I know you're still not back to 100%. Hopefully, when we chat again next week, you are feeling fit and healthy again.
Thank you, Nick. And yes, just a bit of a persistent cough and husky voice. Excuse for the quality, but yes, I hope the content makes up for it. Thank you, and we'll see you again next week. Bye.